Would you say that if we stayed on a gold standard, not just in the US and in the UK, you wouldn't need Doge right now?
No, because the government wouldn't be able to spend money it
Yeah.
has not got.
Friday, February 28th, 2025, Monaco 64, home of alternative economics and contrarian views. Well, Clive, today we're going to look again at who's loading up on all the physical gold that's going to the US. We touched upon briefly on that last week. And it's interesting that the Sunday after, well, last Sunday, Berkshire Hathaway and Warren Buffett came out with some comments. So maybe you could elaborate on that.
Well, a week ago, Mario, on the Friday, we speculated, or rather you speculated, that perhaps the buyer of all this gold could be, and silver, could be Warren Buffett, or rather Berkshire Hathaway. I went along with that because he's got $300 billion sitting in cash, and he's come out of equities to some extent. So it seemed possible. But then, I started scouting around on the internet. I thought I'll check into this. And the first thing did was put it into ChatGPT to find out what ChatGPT has got as an answer. And their response was the chance that Berkshire Hathaway has invested billions into gold is quite low based on Warren Buffett's historical investment philosophy. Buffett has repeatedly criticized gold as an unproductive asset, famously stating that it just sits there and looks at you, and that he prefers businesses that generate cash flow. So I thought, oh, well, that's very interesting. Well, perhaps there's a story there. I'll go and look up what Warren Buffett's had to say about gold. I started investigating. I started going back. And I happen to have a couple of books about Warren Buffett. There's that one, and there's this one called The Snowball. This is about 20 years old, maybe, or 15 years old. So I started looking into this a little bit more to try and build a story about Warren Buffett not being interested in gold and Berkshire Hathaway being the most unlikely purchaser of gold at all. The trouble was, the more I looked, the more I came to the conclusion, Mario, that you could well be right. So let's go back a little bit in history. Warren Buffett was born in 1930. It was the Great Depression. People were lining up outside the banks to get their money. So these people were shuffling along from morning to night, praying as they got closer to their desk, I pray there's some money left for me when it's my turn. And Warren Buffett's father, so don't forget Warren would have been 1 year old or 2 years old at this time. Warren Buffett's father, whose name was Howard Homan Buffett, was one of those who was trying to get his money out of the bank. Unfortunately for Howard, he got to the bank and the doors were closed and the doors never opened again. So in Howard's case, Warren's father, he never got his gold. Howard was a greengrocer like his father before him, and the business was failing anyway because nobody had any money. But he had two children at home to feed. He did one of the craziest things you could ever do in the middle of a Great Depression. He decided to start a stockbroking firm. Now, that's as crazy as you could get because back in the 1930s, Great Depression, nobody had any money and certainly no money to invest. But he went for the stockbroking firm and somehow, we don't know how, he made a success of it. Later, the firm, initially the firm was a joint firm with one of his friends, but later the firm became known as Buffett and Co. So it was his own firm. And he was so successful that they could buy a bigger house, they could get a servant in their home. And by the time Warren was about 18 years old, actually, by the time Warren was about 13 years old, he could buy himself, or rather, I won't say buy himself. He was elected as a congressman, and he served as a congressman for 4 sessions over many, many years. Now, one of the things which came out of all this was, although he was a stockbroker, therefore a great lover of stocks, and he was like Warren himself, he was a value investor. Howard's other passion was for a return to the gold standard. In fact, he was one of the biggest advocates of the gold standard in all of North America. So as a congressman, he'd be making speeches about gold. He'd be writing papers about gold. He would be telling all his friends about gold. And Warren, as a young lad, from the age of 13 onwards, would be sitting around the dinner table, hearing his dad talk to his friends about a return to the gold standard. So all the Warren would have heard as a young man would have been gold. And I just want to quote a few things from Howard Buffett, Warren's dad. These are some of his quotes. In a free country, the monetary unit rests upon a fixed foundation of gold or gold and silver, independent of the ruling politicians. Our dollar was that kind of currency until 1933. Under that system, paper currency is redeemable for a certain weight of gold at the free option and choice of the paper holder. Paper systems end in collapse. But first, let me clear away a bit of the underbush. I will not take your time to review the history of paper money experiments. So far as I can discover, paper money systems have always wound up with collapse and economic chaos. Before 1933, whenever people became disturbed over federal spending, they could go to the banks, redeem their paper currency in gold, and wait for common sense to return to Washington. The gold standard acted as a silent watchdog to prevent unlimited public spending. I have not time to portray the end of the road of paper money experiments. It is worse than just high prices that you have heard about. Monetary chaos was followed in Germany by a Hitler. In Russia, by all-out Bolshevism. And in other nations, he talks about China later, and other nations by more or less tyranny. It can take a nation to communism without external influences. And this is the crucial part here. I can find no evidence to support a hope that our fiat paper money venture will fare better ultimately than such experiments in other lands. Because of our economic strength, the paper money disease here may take many years to run its course. So Warren was living in a family where his father, to all his dinner table guests, would be talking about gold and return to the gold standard. He's talking about the Weimar inflation of the 1940s. And he also had a view which was widely held in the family, because his sister actually said it embarrassingly when someone received a gift of a bond from the father, that government bonds are worthless. Now, you might think that Howard Buffett might have been a gold hoarder, but we must remember after 1933, hoarding gold was illegal in America. You couldn't go out and buy gold, or if you did, you'd be risking prison.
Right.
But well, what you could...
Sorry. He could have bought numismatics. Like, I think, for example, in the 60s, some people were buying sovereigns, which were considered numismatic. But but you're right. He didn't. I think probably people were buying gold miners. That's what they're doing.
Well, in fact, I did discover that he did actually have the odd coin or two as well, but that wasn't really. But what he was doing, and what you could do, was to buy gold bracelets. So for his two daughters, every year he'd be buying gold bracelets for his two daughters. And Warren Buffett, a young lad growing up towards the age of 18, was obviously sitting there watching his sisters get this lovely gold. And Warren, perhaps the best he got was a toy train set. I don't know what he got, but you know, I can imagine that there was a certain amount of jealousy in those years. But Warren was certainly born into a family where gold was part of the family and where fiat money was going to deteriorate to nothing. But Warren also learned a very valuable lesson from his father, and that if you can't buy gold, there's another way to make money, and perhaps an even better way, because his father was a stockbroker, and that way is to buy common stocks. So Warren Buffett has frequently said that he prefers common stocks over gold. But when I look back to see if Warren Buffett had ever bought any gold, I didn't find that. But I did find in the 1960s, late 60s, and this is from Warren Buffett himself, it's not someone else saying it. In the late 1960s, Warren Buffett made his first foray into gold as a private investment. And by his own admission, why did he do it? He saw that gold was going to be demonetized. Don't forget, gold was still money for foreign nations, but it wasn't for American citizens. So he would have bought gold, but he couldn't because it was illegal. So he bought the next best thing. Warren Buffett bought a lot of silver for himself. And he held it and watched it for 40 years, for the years which followed. But by 1997, now he'd held his silver for 30 odd years, been watching it every day. And he made a decision on behalf of Berkshire Hathaway to dive into the silver market. Now, this is a man who's reputed not to be very keen on precious metals, which just sit there and look at you. But nevertheless, for Berkshire Hathaway in 1997, he bought 129.7 million ounces of gold.
Silver.
Sorry, silver, yes, a big one. That was 129.7 ounces of silver for Berkshire Hathaway, paid between $5 and $6 an ounce. Now, he kept that very quiet at the time, but about a month or so before the annual report, when perhaps he might have disclosed it in the annual report, he came out with a press statement. And that press statement basically said that, yes, we bought a bunch of silver. We've had a number of inquiries about it, and we've done it. So he didn't say, he only said we intend to carry on holding it. Now, they were asked about that at the shareholders meeting, and it looks to me like Charlie Munger, his partner at Berkshire Hathaway, was kind of trying to distance himself from the purchase. And I'll just say what Charlie Munger said when Warren was asked about buying the silver. Charlie Munger said, "This is not a big deal for Berkshire. We've got a line of activity where once every 30 or 40 years, you could do something employing 2% of your assets. This is not a big deal. The fact that it keeps Warren amused and not doing counterproductive things, the fact is that it keeps Warren amused and not doing counterproductive things." So then Warren apologizes, saying, "Well, it makes me feel better about all those people who are taking pictures of me, because in photography back in 1997, silver was used in photography." And then Munger, he kind of mocks Warren a little bit. It's more of a joke, but he's smiling at the audience and people are laughing. And he says, making fun of the fact that Warren has been watching silver for 30 or 40 years since he first bought it, he says, "Think of the discipline it takes to think of something for 3 or 4 decades, waiting for a chance to deploy 2% of your assets." I'm afraid that's where we are. It means there will be some dull stretches. In other words, I don't think it's a good investment. So Munger was very much against the purchase of the silver.
Yeah, Clive, one thing you're speaking about earlier about Howard Buffett, how gold disciplines government because the electorate or the public can withdraw its gold from the banks if it thinks the government is overstretching. So would you say that if we stayed on a gold standard, not just in the US and in the UK, you wouldn't need Doge right now?
No, because the government wouldn't be able to spend money it has not got.
So
Simple as that.
gold is Doge, is the ultimate Doge, I would say. The other thing, Clive, this is what you wrote on LinkedIn. You said, what? You want to take delivery for your silver And then it says, but Berkshire demanded the delivery of the silver. This obviously caused some consternation amongst the shorts. But by late 1998, rumors of Berkshire's silver foray were circulating. It's maybe then that Warren received a warning call from the regulator. Some of the shorts were possibly unable to deliver the silver they owed. And it sounds almost like what's going on today with gold and the LBMA. And Clive, I've sent you some copies of this. And this is what Martin Armstrong, he was in prison at the time. He used to publish these reports on Scribd. And one of my friends at work, who was also a gold bug, he printed it out and he did this for me. And as you can see here, it's from 2008. And if you turn to page 60, he actually talks about the Billionaires Club. We're not going to go too much into that. What Martin Armstrong says, and I don't know if he's ever talked about this now in public and on YouTube, is that people like Warren Buffett and other billionaires, sometimes they decide to put on a trade and it has no chance of losing because they're all in it, which is, I would say, illegal as in terms of the regulators. But as to the physical, which is really interesting, Clive, it says here towards the end, and I'm just trying to find it exactly. Oh, yeah. This is on page 61. And this is Martin Armstrong writing. He says, because he was offered to be in this club, Martin Armstrong, to put his client's money in that, and he refused. But he says, to my shock, my telephone rang. It was a broker who was not part of the club to let me know that the Bank of England called a meeting in the morning of all silver brokers. So what Martin Armstrong is implying is that the Bank of England was concerned about this taking of delivery of physical silver. And I'm going to ask you the question, why would the Bank of England be concerned about silver? They don't even have silver in their vaults. Silver has been demonetized for so long. I thought silver was not that important. Maybe you could tell me what you think about that.
Well, obviously, I think they look after their own. The LBMA. We're talking about the LBMA and the Bank of England. It's effectively as good as the same thing. The participants in the LBMA, the big banks, and they're the good friends. They're all buddies. They all have lunch together and that sort of thing. And if someone was taking delivery, that's very awkward for those who don't have the silver. And we mustn't forget that the bullion banks love to play the short end of the market by selling gold that they haven't got, lending it out, gold and silver, it doesn't matter. That's the game. So when someone takes delivery of what they bought, it's unexpected. So what was going on in 1997, Berkshire Hathaway was taking delivery. Where was he taking delivery? He was taking delivery of the silver he bought on COMEX in New York. He was taking delivery of it in London, right? So, and the reason he was doing that, I'm quite sure, was to maintain some level of secrecy about what was going on. So obviously, at a month before the annual report was due out, when he might have told people that he bought silver, I think he was forced to make a disclosure, which is why they made this press release. And there's some very interesting words in the press release, which I'll just read you a couple of lines of it. And I think this is why he was forced to make why the Bank of England was so worried. These are his words. If any seller, by the way, at the time he had 42.2 million out of the silver that they bought, which was at that time not yet delivered. In other words, they bought on COMEX, its futures, it's being delivered as it matures, but 42.2 million had not yet been delivered. So he said, if any seller should have trouble making timely delivery, Berkshire is willing to defer delivery for a reasonable period upon payment of a modest fee. So here he is, he's giving a sop to the regulator. don't worry, I'm not going to disrupt your market. If people can't deliver, I won't sue them. I'll give them a delay and they can pay me a small fee. So, but my real point here is that here's the man who's grown up in a world where his father was talking about gold. It was illegal to own gold. He bought the next best thing for himself as a younger man in the late 1960s. Later on, he's been following silver. Berkshire Hathaway buys silver, a lot of it. His best friend and co-owner of Berkshire Hathaway, Charlie Munger, doesn't seem to agree with that purchase, but says, okay, Warren's having fun. It's keeping you out of trouble. But obviously, they had a little bit of an argument about it by the sound of it, if you listen to them on YouTube talking about it. So for the next, from 1997 through to now, Warren Buffett has not been messing around, to my knowledge, with gold or silver. And I know he's quite right. Gold just sits there and looks at you, so does silver. It's not paying any interest. And we've been in one of the greatest bull markets in all of history for stocks. But a year ago,
Clive, can I just show you something? I think I'm not sure if it was you who asked me about this. Someone asked me if I could do, I think it was one of my friends, a chart of Berkshire Hathaway's A class. That's the main stock of Warren Buffett versus gold. And of course, in the 80s and 90s, it was the right time to own Warren's company. But if you go back to 1998 till now, yeah, his company stock has gone virtually nowhere versus gold. So may I don't know if he's looked at this chart. So just wanted to show you that.
and so important point to make, Mario, one of the criticisms that Berkshire Hathaway has had about gold is that it pays no dividend.
They
Who can
don't
you think
either,
of?
do they?
Yeah, who can you think of pays no dividend? Berkshire Hathaway pays no
Yeah.
dividend.
And the reason Warren Buffett has this policy, and I've read about it, I think it was a book I bought actually when I was working in Geneva. It talked about Warren Buffett. It was called The Intelligent Investor, I think. I don't know if you have that one. And he
Ben,
said,
ben Graham.
yeah, and he says that the reason he doesn't like paying dividends is because it's not tax efficient. So he plows the dividends into the company. Yeah, Clive,
Yeah, I've got that book
I
somewhere.
think I interrupted you, but so I'll let you continue. But I also
So
want to ask you because last Sunday, actually, Warren Buffett came out and with a statement for the company. Maybe you can cover what he said at the time as well.
exactly. So from 1997 onwards, for the next 25 years or 24 years, let's say, Warren Buffett and Berkshire Hathaway didn't touch precious metals. I don't know if they kept their silver position. They probably did for a while, but they didn't touch because that would have created an argument between Charlie and Warren. Clearly Charlie Munger was against that purchase, and Warren didn't want to upset him by buying any more ever. But Charlie Munger died just over a year ago, which means if Warren does decide to buy some precious metals, there's no one who's going to be upset about it, at least not running the company. Now, we know that Warren Buffett, about a year ago, the man who always thought that equities were the best thing, started selling off some of his equities. He still thinks equities are a great investment, but he's raised 350 something like $1 billion from selling equities, and that's sitting in cash. It's been sitting in cash for more than a year, earning a modest rate of interest, 3.5%, 4% that you get whatever you get on treasury bills. But is he really keeping 100% of his money in fiat, the thing that his own father despised, and he grew up believing that fiat was a bad thing? Now, I agree. I think Warren Buffett generally, historically, thought that equities were a better deal than gold. But does he think that gold is a better deal than fiat? Well, I think he does. And the reason I think he does is when I read the words which came out in the annual report, that's the shareholders' letter, a few days ago. So this is from the shareholders' letter, which I think it came out on Sunday after we spoke, Mario, and the 2024 annual report. And it's only one paragraph. I'll read it to you. This is what Warren Buffett says. Paper money can see its value evaporate if fiscal folly prevails. In some countries, this reckless practice has become habitual, and in our country's short history, the US has come close to the edge. Fixed coupon bonds provide no protection against runaway currency. Fixed coupon bonds provide no protection. Now, Warren Buffett, at the 31st of December, 300 something billion dollars in cash. And he's saying, if I read those words, he's saying that's a bad deal,
Hmm.
offers no protection. So it it might well be that he's in the market buying up some of that gold and silver. There's nobody to stop him. Charlie Munger's gone.
Yeah.
And he's grown up in a household full of gold bugs, if you like, in a certain sense. And he bought silver himself several times over, two or three times over historically. He's not against earning precious metals if there's a profit to be made. That's my opinion. So it
No.
might, well, I'm not going to exclude it totally. It might be him.
Yeah, and looking, you said runaway currency, debasement. And I've got a couple of charts here I wanted to show. The first one is of the runaway collapse or debasement of the Reichsmark back in Weimar, Germany. And just remember this chart because I'm going to show you another chart that looks very similar in my opinion. And the time frames are different, but there's something in technical analysis, Clive, called fractals, where you have the same pattern but a different size and different time frame. It's almost like it's something that happens in nature as well. Like you look at branches of a tree, they're smaller and they get bigger. They all look the same. Sorry. They all look the same, like a small wave looks like a bigger wave, right? But notice here that in the summer of 22, well, the Reichsmark started really collapsing, and this is how many paper marks you get for a paper for a gold mark. I'm not sure what the weight of a gold mark was, but it doesn't matter. So you can see that after World War One, it started. It was should be 1 to 1, but it went up. Like let's say here uh, I don't know where that probably was around 50, corrected back to 10, and then it consolidated for a couple of years, tried to break out this level, came back down a little bit, and eventually it broke out. And this is a straight line, but and this is probably more like a monthly chart, but I can see on the way down that the paper mark there was a lot of volatility in this market. I'm gonna wait for Clive because
Yeah, I was just looking for. I had one of that. I didn't
yeah,
find it. I have one of those uh, billion trillion dollar
yeah,
mark pieces.
I have some of them as well. But what I was trying to say, Clive, this chart, just keep this chart in your memory because I'm going to show you another chart. And the other thing, Clive, as I said, it took off here in 22. So the Reichsmark started collapsing. And I'm
Well,
sure,
you know what that reminds me of, Mario. When we were working, the bosses would always ask about what the profit will be next year, and we had a chart which looked like that. It was like a hockey stick, go down a
yeah,
bit, then go straight up.
yeah. The other thing as well, this is very smooth, this chart, but I'm sure there was a lot of volatility along the way, and many people that were holding physical gold in Germany probably even here they probably said when it came down here they got rid of it because they said, "Oh, gold's finished." So I want to show you this other chart now. Uh, and of course, I can go back quite a bit this just to show you how I got these trend lines. But if you come to like, let's say around here, it looks very similar to that German chart. This is, for example, right after the war when we saw it go to 50 and then it corrected and then it consolidated tried to break out a few times, and now it's finally broken out. And if you look at this chart again, I'll bring it up here. We're kind of like here, I think, Clive. And what it tells me is that I'm not saying we're going to go to a quadrillion, the price of gold, but I think we could. There's still a lot of time or a lot of room on the upside. And I know in the last few days, gold has corrected, but I think. What do you think, Clive? Don't these charts look very similar in terms of the fractal?
They do it, of course, as you said, Mario. During the Weimar inflation, we had many periods when gold was going down, sometimes for a year or more. But it wasn't a straight line, even though in your chart, because it's very compressed, it looks like at times it was a straight line up. And where we are now, we've got the American stock market teetering on the edge. It looks like it's about to plunge, and as the American stock market goes down, of course, everything's going to go down. Bitcoin's going to collapse. The gold price is going to collapse. Stocks are going to collapse. But the trouble with that is those who are nervous Nellies, they'll be selling, but they will be unable to get back in when the tide turns. Because at the bottom, things always look much worse, much more bearish than when you sold on the way down. So I've been investing money for 50 years, and I've seen my clients doing the same thing. I have never yet seen someone who sold because they thought things were going down. They were sometimes right about them going down, but I've never yet seen one of them manage to buy back at a lower price than they sold, even though the opportunity existed sometimes for many years, because when prices were lower, people felt more bearish than they felt at the time they sold, and they cannot make the decision because things look worse. So what I'd like to say to your listeners and viewers, Mario, is yes, gold's going down at the moment, but don't be frightened. Don't allow yourself to be panicked out, because if you do, you'll never end up buying back when it hits rock bottom. You're going to feel far more negative at that moment in time. So we have to, ride it through and use this as an opportunity. If you haven't got enough gold, use it as an opportunity. This downward draft in stocks, Bitcoin, gold, and anything else which is falling at the moment. Use it as your opportunity to pick up a little bit more cheaply. And if you're a consistent buyer, you'll have bought some close to the bottom of this cycle. I don't know if this cycle is going to last a week, a month, a year. Probably not that long in my view. But we're obviously, if you look at the way the monetary system is going, governments are absolutely out of control. We're seeing some cuts in America, but the tax breaks mean that they've given away far more in tax breaks than they're cutting in spending. So that deficit is going to continue to grow, and it's going to go out of control. So it's only a question of time before the current dip we're going to be seeing in the gold price will turn around and go back up. And I would say those who think they can sell it now and buy back at the bottom, they'll miss the bottom. Absolutely. They won't buy back. They'll end up buying back at a higher price than today.
Yeah, and I also think because in '08 gold, when the market crashed in September, October with Lehman, gold went from just above 1,000 in March, and it dropped to like 680 in the end of '08 there when we had the culmination of the '08 crisis. So it dropped quite a bit, but it was still above where it was like in the beginning of '07 when the crisis started. And I remember really well because I was already involved in gold for quite a few years. I was working in the city. I did think, and it would have happened, Clive, all those Wall Street banks and London banks, they would have gone under. We were just sitting there at work waiting for the next shoe to fall. But then, of course, they came in and bailed everyone out. But I remember you couldn't, you had to wait a long period of time, and you've spoken about that to get physical gold. The premiums were really high, so you're not really buying physical gold at the prices you're seeing. But I think this time it might be a little different in that the drop in gold and silver will not be as sharp as the general stock market. And I just want to show you here, Clive. I was looking at this last night, the chart of the S&P. It's not looking very good here. Of course, today is the end of the week, end of the month. So it could rebound, but I think it will be a key day for the markets. Anyway, what do you think, Clive?
Um, Nvidia's results, which came out, weren't as brilliant. I mean, Nvidia would have had to bring out absolutely amazing results to keep that gravy train going. The results were uh, very, very good, but they weren't as amazing as the market would have liked. And I think, what's happening is people are starting to pare back a little bit that growth. They've had uh, truly amazing growth expectations for the future. Not only Nvidia, we're talking about all of the Mag 7 with AI and everything else. And those amazing growth projections are still there, but they're a little less amazing than they were. And the reason is because a realization is setting in that when you have a huge profit somewhere, and there's a huge profit for those involved in the AI scenery, arena, competition will start to set in. Companies will from India, from China, from the UK, and also from many places in America will start to emerge, which offer alternative solutions to those who want AI solutions, cheaper solutions, faster solutions, more intelligent solutions, all kinds of solutions. So there'll be competition. And when you've got competition, it means you can't charge quite as much as you used to, or rather the same amount of money has to be shared amongst more participants. So those profits, whilst they will continue growing, they won't be growing quite as fast as some of the most optimistic analysts were expecting. And I think in the coming weeks, we're going to see them paring back a little bit here and there their expectations. Those who've got the most outrageous optimistic forecast will bring it back a little bit and come back into the middle of the pack. The way you keep your job is always to stay in the middle of the pack. I know that sounds crazy, but
Yeah.
that's the way they think.
Clive, just one before we wrap up, I've been following this a little bit, and it's just on investing.com. They've got all the major indices, they've got the prices, but also the performance. And year to date, you can see that it's only the Dow that's up slightly. S&P is going red. Nasdaq is down almost 4%. The small caps is down 4%. And then I also been following this here, Clive, which is commodities. And if you look at the metals and the performance, yes, they've been down this week. But if you look at year to date, with the exception of zinc, they're all up. And gold, for example, is up almost 9%, and silver is up about 7.3. Are you of the thinking that what happens in the first few weeks or first first 2 months of the year, how the markets go determines how they'll uh, perform for the rest of the year? Because it seems right now that money is shifting on a relative basis towards hard assets and going away from stocks by looking at that performance.
Statisticians will tell you, and I think they're right, will tell you that the first few weeks of the year tell you what the year is going to do, whether it be in stocks or commodities or interest rates or anything else. So yes, I think we're going to see, we're not going to see an outstanding performance from the stock market this year, and I'm being kind of gentle there. I'm not saying it's going to crash. I'm not, but I do think it will go lower. I think we're going to have a good year overall for metals. That seems to be the case. But if I could just touch on another thing, Mario, and that's gold mining stocks. Gold mining stocks are still significantly lower in price than they were a decade ago. Over the last 2 years, since the gold rally started, they've just about kept pace with the rise in gold. But since the 1st of January, gold mining stocks have been slightly outpacing gold, about double. So gold's done about 8% or something like that. Gold mining stocks are up about 16%. So we are now in a situation where gold mining stocks are playing catch up, and I think that's something which people should be looking at. So what we'll see, if I give you an example, when the gold price goes up, in general, their sales will rise faster than their costs. So let's say the costs for a gold mining company are rising by 5%, but the sale price is rising by 10. So give you an example. Let's say the gold mining company was mining its gold at a cost of 95 and selling it for 100. So it was making $5 an ounce. Now, a year later, the cost of mining the gold has gone up to 100, but the price of selling it has gone up by 10%, and they're selling it for 110, they've doubled their profit. Their profit has gone up by 100%. Now, we're already seeing that in the results which are coming through from gold mining companies. Those which are reporting are generally reporting huge increases in their profits of sometimes more than 100% year on year. And that's based on gold mining prices of up to the 31st of December, when the gold price was a lot lower than it is today. So I think we've got very large profit increases coming through from gold mining companies quarter by quarter for this year, and even more so next year. And don't forget, when they're reporting these profits, there's always a lag, because most gold mining companies have sold part of their production forward, which means they sold some of this year's production last year at last year's prices. But they'll be selling some of next year's production at this year's prices, which is a much, much higher price than last year. So that will have a very leveraged effect on gold mining companies' profits. Now, it may be slightly less leveraged than some people think, because if you're a mining company, when the gold price rises, you start to mine the less profitable grades of ore. In other words, you don't mine your best grades; you keep them in reserve for the rainy days. So you start to mine the less profitable grades of ore, so you can just increase your profits a little bit more in a more guaranteed way. But we've had many decades, at least a decade or more, of no investment at all in the gold mining sector. These large companies really need to increase their reserves, and there's a huge swathe of small mining companies with lots of reserves and no money. It's a prime time for the large mining companies, which are now all very cash rich and or have no debt, to go and buy some of these junior miners, which have got the gold but just don't have the money.
Yeah, I just wanted to show you this, Clive. I don't know if you remember this in 2020. Warren Buffett bought into, and Berkshire Hathaway bought into Barrick Gold, but they quickly got rid of it. I don't know why. Probably was a good decision because it hasn't done that much since then. And I also remember him buying mining stocks some years before, so that he could be looking into that. But I think the physical, as we wrap up here, Clive, I think yeah, it's probably the probability is fairly high that he might get some physical gold with I think right now his cash pile, Clive, is 334 billion. So yeah, that's the way I see it. But even if it's not Warren Buffett buying physical gold, it's very unusual for physical gold to actually be taken out of the COMEX. And so we're going to keep an eye on that.
Yeah. Well, look, somebody is taking delivery of 100-ounce bars. That's what COMEX is delivering. 100-ounce bars, it's not mom and pop. Okay. This is whoever is taking that delivery is a big player. We know that mom and pop are not buying gold, because we look at the gold ETFs and we can see quite clearly that over the last few years, the amount of gold expressed in tons in the ETFs has been going down. So no interest for the retail investor in the gold ETFs. And also, we're hearing the stories now from the gold smelters that coins and bars are coming back from the coin shops, where normally the coin shops that they have gold comes in and they buy from the smelters, buying coins to sell to their customers. But now they've got too much inventory. The coins are coming back from the customers. They're sending them back to the smelter, either on loan or to be melted down. So that tells us that the retail investor is a seller, but there's big buyers out there buying, and we know there's big buyers buying because those gold bars are being delivered on COMEX, and the price of gold is rising. And therefore we know it's not the small investor, it's a big player or big players who are buying the gold. So what happens when the small investor starts to get involved in the market as well?
Yeah, and the other thing I would say about COMEX, and I worked in the futures market for years, and I know this from experience, and also from Rafi Farber a few years ago. Him and a few other guys tried to take delivery of I think it's a 5,000-ounce silver bar. That's the size of the contract for silver. And they made it so difficult for him to actually take the delivery. So yeah, they'll do the same if Joe Bloggs or John Doe wanted to take delivery of a 100-ounce bar on COMEX, the broker would make it impossible for him. But if it's a billionaire, and it could even be the billionaire club, Clive, they're all buying gold together. Who knows? That's more speculation. So I'm gonna wish the viewers a great weekend. And yes, Clive, we're going to talk on Sunday at the live stream. Any final words for the viewers?
Well, remember it's SmackDown Friday. They always try and depress the gold price on a Friday. Don't get too worried about that. That's kind of what happens every Friday. Thumbs up to all your viewers.
Yeah, thumbs up.